Welcome everyone to Last Week Tonight. Except this is not Last Week Tonight, and nor do we have an HBO budget. Neither do I have a sexy English accent.
It's like comparing La La Land, an Academy Award-nominated movie with glaring flaws, to The Human Centipede, a thing that barely counts as a film. Yes, one movie is people sewn mouth to anus, but, Ryan Gosling looks at his feet when he dances, so it all evens out in the end.
Sorry. Unfortunately, I am your host tonight, and we are going to cover a serious topic, the Deepak Kalal Rakhi Sawant wedding. So it all started with a big bang. So basically, there are different levels at which the government and the RBI have locked horns. And first, we are going to start with dividends. Under the RBI Act of 1934, the central bank is required to pay the government its surplus after making provisions for bad and doubtful debt and for all the rest of the matters. Whatever money the RBI holds, it earns an interest over it, and that sum is used to run the central bank, pay everyone, electricity bill, house rent, decryption in assets. After making all the provisions, whatever money is left is transferred to the central bank as dividends. So then, for the year FY 2016-17, the RBI just transferred.
मेरे घर के बाहर घू है कब हटेगा सियाचिन में हमारे जो
Though the central bank mentions no official reason for the reduced payments, the cost borne by the apex bank during demonetization is widely blamed. The government already struggling to meet the fiscal deficit, and it being almost the election year, the government was expecting to boost the welfare schemes, and by this decision, the government was triggered, and then they made an additional demand of 130 billion rupees, which was obviously rejected. The RBI calculates its capital needs based on stressed value at risk valuations, while the government wants the central bank to use just value at risk, which most other central banks use. The government labels the stressed value at risk valuation as preparing for an asteroid apocalypse and deems it unnecessary, says that the RBI has 3.6 trillion rupees in excess, and the government demands it as surplus. But experts argue that using the RBI funds for casual reasons will hamper the confidence in the market and won't set a good example. Seeing the historical records of instances where the government forced the central bank to shell out surplus turned out
आप सभी को संजीव कपूर का प्यार भरा नमस्कार
to be disastrous for the whole economy. The RBI argues that the reserves are for emergency economic meltdowns, and using this will hamper the economy in the long term. And after all this, the government is still forcing the RBI to shell out the capital. Many see it as a short-sighted move, since the elections are closing up, the government just wants more credit. An interministerial panel was set up to finalize the Payments and Settlement Systems Act 2007, recommended a host of measures to create a regulatory framework for India's payment systems and submitted its draft to the Finance Ministry in early September. Among the many proposals in the draft, one stated that the new payments regulation body be independent of RBI. The panel suggested that the payments regulator should be independent and the chairperson must be appointed by the government in consultation with the RBI for various reasons. The new PSS Act aims at boosting innovation and giving a fair chance to the non-banking players and basically concludes that the RBI, having to deal with major economic decisions all the time, falls short in the areas like payment systems which are driven by tech that keeps evolving at a much faster rate. It would be better that an independent body looks after these things. Maybe, but keeping in view the current handling of digital payments in the country under its umbrella organization NPCI, the RBI has brought in pretty darn advancements to the sector with the likes of UPI, Bharat QR, FASTag, out of which the UPI has been received very well by all of the world. Seeing India succeed at building such complex fintech infrastructures at which the first world countries suffer too. And again, there are areas like blockchain tech and cryptocurrencies which the RBI has distanced itself from, leading to a blockade of innovation in those fields. With every passing second, the Indian fintech startups lose edge to the world's open to cryptocurrency. So maybe a separate body seems like a good idea. But considering the fact that by 2023 we'll trade $1 trillion through digital payments. Imagine $1 trillion trading outside the authority of the central bank. That would sure create a weird situation. Two different bodies monitoring one single aspect of the economy. It would sure dilute the power and corrode the market confidence in the central bank, which the bank points out loudly in the dissent released by it. The central bank argues that since the currency is the foundation, payment systems ultimately lie within the remit of RBI. Clearly, the cons outweigh the pros, so then why the government is forcing this draft with such force? It seems less about the innovation and shit and more about the power tussle. The government and the RBI have always had a bitter relationship, and since now the government has a chance to seize control from the central bank, it is betting on it really hard. If the center, in the grab of making payments regulatory body independent, take controls of the body, there are chances that the board too is made a scapegoat for policy failures in payment and settlements resulting from the decisions taken at ministry level. Besides, like all the things controlled by the government, the PRB's greater dependency on the government is likely to lower its chances to monitor and regulate the sector properly. In the case of many other independent authorities, including the Telecom Regulatory Authority of India, Central Pollution Control Board, and the Supreme Court of India, where the members need to be appointed by the center. Appointments are hardly ever made in time, and more often than not, they get delayed by months and even years.
मिलाड, तारीख देने से पहले मैं कुछ अर्ज करना चाहूंगा। इजाजत है। पहली तारीख में यह कहा गया कि दामनी पागल है, उसे पागल खाने भेज दिया, जहां उसे पागल बनाने की पूरी कोशिश की गई। दूसरी तारीख से पहले अस्पताल में पड़ी उर्मी का खून कर दिया गया और केस बना खुदकुशी का, जबकि इस अदालत में मैंने यह साबित कर दिया कि उर्मी ने खुदकुशी नहीं की, उसका खून हुआ है। और शेखर भी उस दिन सारे सच कहने ही वाला था कि चड्ढा साहब ने फिर से अपनी चाल चल दी, बीमारी का नाटक करके तारीख ले ली। नहीं तो उसी दिन मिलॉर्ड इस केस का फैसला हो जाता। और आज आप फिर से तारीख दे रहे हैं। उस तारीख से पहले सड़क पर कोई ट्रक मुझे मार कर चला जाएगा और केस बनेगा रोड एक्सीडेंट का। आप फिर से तारीख दे देंगे और उस तारीख से पहले दामनी को पागल बनाकर पागल खाने में फेंक दिया जाएगा। और इस तरह ना तो कोई सच्चाई के लिए लड़ने वाला रहेगा ना ही इंसाफ मांगने वाला। रह जाएगी तो सिर्फ तारीख। और यही होता रहा है मिलॉर्ड। तारीख पर तारीख, तारीख पर तारीख, तारीख पर तारीख, तारीख पर तारीख मिलती रही है, लेकिन इंसाफ नहीं मिला मिलॉर्ड। इंसाफ नहीं मिला। मिली है तो सिर्फ ये तारीख। कानून के दलालों ने तारीख को इंसाफ के खिलाफ एक हथियार की तरह इस्तेमाल किया है मिलॉर्ड। 2 तारीखों के बीच अदालत के बाहर ये कानून का धंधा करते हैं। धंधा जहां गवाह तोड़े जाते हैं, खरीदे जाते हैं, मारे जाते हैं, और रह जाती है सिर्फ तारीख। लोग इंसाफ के लिए अपनी जमीन जायदाद बेचकर केस लड़ते हैं और ले जाते हैं तो सिर्फ तारीख। औरतों ने अपने गहने जेवर यहां तक कि मंगलसूत्र तक बेचे हैं इंसाफ के लिए, और उन्हें भी मिली है तो सिर्फ तारीख। महीनों सालों चक्कर काटते काटते इस अदालत के कई फरियादी खुद बन जाते हैं तारीख, और उन्हें भी मिलती है तो सिर्फ तारीख। यह केस पूरे हिंदुस्तान के कमजोर और सताए हुए लोगों का है। आज उन सब की नजरें आप पर गड़ी हैं, आप पर, कि आप उन्हें क्या देते हैं, इंसाफ या तारीख। अगर आप उन्हें इंसाफ नहीं दे सकते तो बंद कीजिए यह तमाशा। उखाड़ फेंकिए इन कटघरों को, फाड़ दीजिए, जला दीजिए इन कानून की किताबों को, ताकि इंसाफ के ऐसे चक्कर में और लोग तबाह ना हो, बर्बाद ना हो।
ये हो क्या रहा है? ये कोर्ट की तौहीन है। इट इज कंटेम्प्ट ऑफ कोर्ट। मैं कहता हूं कि इसे सजा दीजिए, अभी फौरन इसे सजा दीजिए।
ऑर्डर ऑर्डर। मिस्टर चड्डा, किसे सजा देनी चाहिए और किसे नहीं, इसका फैसला अदालत करेगी। ऑर्डर ऑर्डर। जब तक यह अदालत किसी नतीजे पर नहीं पहुंचती, बर्खास्त नहीं होगी।
Gross NPAs increased to 10.2% in September 2017 compared to 9.6% in March, according to the Reserve Bank of India, which has cautioned against further deterioration as gross NPAs could inch up more. Earlier this month, the International Monetary Fund warned of an impending shock to the banking system if that happens. The non-performing assets accumulated by Indian lenders are higher than those of the banks in most major economies, including the US, UK, China, and Japan. In fact, India ranks 5th out of the 39 world major economies plagued by bad loans. Countries with higher NPAs than India are part of a distressed PIGS group, namely Portugal, Italy, Ireland, Greece, and Spain. These 5 Eurozone nations have faced immense economic and financial stress for a decade now, and with several steps have been taken to restore their health. In order to make the process of declaring and reporting bad loans more efficient, the RBI has streamlined the norms into a new framework. This new framework to deal with NPAs mandates weekly reporting, requires banks to recognize the problem instantly, and leaves little room for account jugglery. NPAs are basically bad loans on which borrowers have stopped repaying either the principal or the interest. The PCA framework kicks in when the bank breaches any of the 3 regulatory trigger points, namely capital to risk weight asset ratio, net non-performing assets, and return on assets. The government wanted RBI to align its PCA framework with global norms, which recognizes only slippage on capital to risk-weighted asset ratios. The differences came out in open when Deputy Governor Acharya, in a hard-hitting speech in October, talked about the independence of the central bank, arguing that any compromise would be potentially catastrophic for the economy. You can find the link to the speech in the description of the video. Subsequently, The Economic Affairs Secretary Subhash Chandra Garg and government nominee on the board took an apparent dig at Acharya's wrath of financial markets comment in a tweet saying vital indicators of the economy were showing improvement. In the first phase of the program, lenders are not allowed to distribute dividends and the owner is asked to pump more capital in the banks. Further checks are placed on hiring and financial position of a bank does not improve after the first set of remedial measures. So far, Dena Bank is the first bank to be barred from any fresh lending in recent years. So the RBI was like, Dena, nahi dena. In the third phase, the RBI can also recommend the winding down of a bank or merger between peers. One of the reasons for the spike in sold loans at all the banks is the same new stricter guidelines of NPA issued by the RBI. Under the new norms, banks are required to recognize and report a default instantly, leaving little room for account juggling. Of course, Indian banks have been blamed for giving out fresh loans out to pay the older ones, leading to an unprecedented pile-up of gross NPAs to the tune of rupees 8.4 lakh crores as of 2017 December. Not surprisingly, banks are not too enthusiastic and have been reportedly been lobbying for a breather. They are specifically unhappy about classifying a loan as an NPA even if the interest or principal amount is overdue by a day over and above the 90-day repayment deadline. Usually they decide on a case-to-case basis, which often helps underreport the NPA levels. The problem is that banks often play within the rules of the game and they just disclose what is the minimum required.
हाँ जी, बहुत बहुत शुक्रिया आप सब यहाँ आए। देखिए क्या है ना कि हमने देखा है पिछले 15-20 दिन से कि आप सब सेलिब्रिटीज़ के पीछे भागते हैं। हमें फ़ोटो दे दो, हमें बाइट दे दो, लेकिन सेलिब्रिटीज़ आपको भाव नहीं देते। लेकिन तो फिर हम दोनों ने सोचा कि क्यों ना हम आपके सामने आके आपको भाव दें। इसलिए हम दोनों यहाँ पे आए हैं और हमारी बहुत जल्द शादी होने वाली है। मैं तो आपने तो मुझे हमेशा बोलते हुए देखा है। अब मैं चाहती हूँ कि मेरे वुड भी आपसे बात करें और आप हमारे लफड़े के बारे में बताएं।
डेफिनेटली आप लोग मुझे पूछ रहे हैं कि आप क्या कुछ बोलना चाहते हो। जब बीवी हो राखी सावंत जैसी तो दीपक कलाल बोलना नहीं कुछ करना चाहेगा, क्योंकि राखी बहुत हॉट है। और जब मैं उसको पहले टीवी पे देखता था, उसके आइटम सॉन्ग्स देखता था, तो कभी सोचा भी नहीं था कि राखी जो है वो मेरी हमसफर बनेगी। और जब ये मेरे आइटम सॉन्ग्स देखते थे तब इनके खड़े हो जाते थे रोंगटे पागल। राइट हाँ, क्योंकि मैं पहले से ही बहुत हॉट एंड वाइल्ड रहा हूँ। तो जब राखी को मेरे मर्दानगी का एहसास हुआ। हाँ। भाई आप लोग चुप हो गए? अरे वो फ्रेम में आ रहे हैं भाई, मैनेज करना ना यार, कर लो इसे यार, ऐसे लेना करो यार आप लोग। इतना आगे लो, क्वाइट प्लीज यार, क्वाइट। फ्रेम एक बार सबको जगह दे दो यार इसमें। चलो जाने दो, स्टार्ट।
At a time when the stressed assets in the banking system are at 11.90%, that is, out of every rupees 100 lent out, 11.9 is at the risk of not being recovered. A tough stance is required, the RBI believes. 11 out of the 21 public sector banks in India are already under the banking regulator's supervision and had to contend with the restricted business so far. Now, the Reserve Bank of India has completely barred the Dena Bank from any further lending or hiring fresh employees. The RBI says the new norms are aimed at correcting credit behavior. Since the PCA framework restricts the amount of loans bank can extend, this will definitely put up pressure on credit being made available to companies. Large companies have access to corporate bond markets, so they may not be impacted immediately, but this will sure put pressure on companies that come under MSME, that is, micro, small, medium enterprises. The request to relax the PCA norms comes at a time when the growth is slowing and the non-banking financial companies are constrained by lack of liquidity, says the government. Since loans from NBFCs contribute almost 17% of the total credit takeoff and one-third of the retail credit, the crisis will hit loan growth. Since public sector banks that have 70% of the market share have capital constraints, they are unable to fill the space vacated by NBFCs. This implies that since banks under PCA restrictions can't loan out credit, this will sure affect the market liquidity and ease of loan to the medium-small micro economies, thus creating a liquidity crisis in the market, creating hurdles for new businesses. Since almost all of the MSME businesses look forward to the PSBs for their credit requirement. And since almost 11 of them being under the PCA framework is sure going to hit the government plans of boosting economy, jobs and growth. Concerned by this idea and that the elections are due next year, the government is in a panic mode with respect to the PCA framework and is repeatedly asking the RBI to ease the triggers, and even considering to invoke the Section 7 Act of RBI to make them ease the framework, thus putting the autonomy of RBI at risk. With response to these concerns, the central bank has said multiple times that there is no liquidity crunch in the market as of now, and the tight PCA norms are necessary to improve the credit lending behavior of the market and will be helpful in controlling the wild pileup of bad loans. And since then, the central bank has set on working on a number of different measures to make sure the MSMEs don't suffer. But the banks and the government have been putting a lot of pressure over the idea of easing the PCA framework again and again. All of this happened before Ujjitji, the Yes Boss guy from 2016 who eventually went rogue like a cliché bad guy becomes good guy movie, resigned the office. Yes, this is the first time since 1991 that an RBI head has resigned before the term completed. The government was of course swift with the appointment of the new head, Srikanta Das, this time a bureaucrat instead of an economist, as up till now he has been quite the nodding guy and has promised to hear out the issues of the government and try to resolve them as soon as possible. There was even news that the RBI is about to give the government a sum of at least 4.32 billion USD as an interim dividend. So yeah, the government pretty much got its way after forcing humans who shared their ideologies into the RBI panels and eventually firing the once puppet who went rogue. It is sad seeing a democratic government handling things with force instead of logic and diplomacy, and this isn't an issue specific to economy or RBI. It's a pretty wide issue, how the governments have always tried to curb the independence of humans, of institutions, of democracy in the name of the greater good. In the following sketches, we will be trying to cover the same idea over different aspects of the society. Stay tuned, peace out, and keep your brains out there. Wild, wild times coming.
Now it's time to wash up. Wash along with me. We wash our hands to make them neat before we fix our tasty treat.